Hello and welcome to another video for myatmm.com. It's time to look for some transactions to track or some new positions to get into. So let's get right to it. Here we are in thinkorswim's trading platform, and we're logged into our paper trading account to review the transactions that we set up last week for BITO, or the Bitcoin ETF. And just looking at the activity and positions right now, it looks like the the cash secured put that we had set up had been assigned, and looks like we bought another 100 shares, and it looks like our covered call is still in action, has 5 days left, but it only has a nickel worth of extrinsic value left, so we're probably going to look to roll that. Based on our cost basis, we might lower it too, so we'll have to look at the website and figure out what we're going to do. So let's go over to the account statement. All right, so last Sunday was what, the 21st? Okay, so here's the 21st orders that we had set up, and we have the covered calls, cash secured puts here. I'm just looking at ones that filled and canceled. It looks like we rolled one that was filled, and then we set up another one. That's right, because we already had two in action, and we threw on a third one separately. And today it looks like we will be rolling the covered call that has 3 contracts and setting up another one for a 4th one. So that's getting interesting. First off, let's just stick to the basics. We have 3 transactions right here. You can see on the account statement that we need to go ahead and track, and we have an assignment that happened that we need to track as well in the website. So let's go over and do that right now. Okay, here we are on the website, myatmm.com, and sadly, apparently I had messed up the recording, and I had already recorded rolling the positions and adding the cash secured put positions and even adding the transactions, and something got messed up with the recording, so I didn't get that piece of it on the video, which really stinks. But I did get the before and after. In any case, I had already logged all those transactions, and so you can see from that cash secured put assignment, it was assigned right here, so we did have to enter the 2850 transaction, and I did enter the cash secured put and then removed it from that assignment. Basically, at the end of last Friday, it was at 2850, and the last price is 2770, so we did get assigned on that. So our total position is 400 shares. And we did go ahead and add another covered call contract to represent the third one, which was already, actually that wasn't there. I added that from last week. So yeah, this is really confusing segue in the middle of here, so I'm very sorry for that. But you can see right here from the transactions that we entered, so this was from the cash secured put. We collected $72 on that. And then from the covered call for the single contract that we added, we collected $62 on that one. And the covered call, the 2 contracts that we rolled, we collected another $77 on that one. And then right here is from the assignment purchasing the stock. So to just review the overalls in this position, we currently own 400 shares, and the total cost is $12,100, and stock value is $11,000. So right now we have an unrealized loss of $1,020 based off the last trading price. And the total premiums that we've collected is $737.03. And this is our new cost basis, and the cost basis with premium that we're setting at. But now we're going to go back over to thinkorswim to look into see how we can roll these positions, like these covered calls that we're going to roll them over, because we can reduce it down to 3050 because that's our new cost basis. So we'll go ahead and go do that. Okay, so here we are in thinkorswim's trading platform again, and we need to pull up the cost basis, so we have that on the screen so we can refer to it. So there that is right there. So we have the cost basis of $30.25, and our cost basis with premium, which is basically what our overall cost basis is when we include what we've purchased the stocks for and all the premium we've collected, we're setting at $28.41. That's relevant if we were to try and liquidate and just cash out of our position. All right. So what we need to do is come over to the Analyze tab. And in fact, what I want to do first is I want to focus on the contracts that we currently have in play. So we currently have these 3 covered calls expiring this Friday, they have an extrinsic value of a nickel, which basically just that's just the time value that they have left in them. But the strike price is 31, and we know from here we can actually look to lower that to a $30.50 strike price instead and collect some more premium on that. So what you do is you left click on there to select the row, you right click on it and come down to create rolling order, and we're going to basically just roll it. And by default it rolls out a week, but we don't want to roll out a week at this strike price. We want to try and keep the expiration the same, so we come in here and change it back to May 3rd, and we want to lower the strike price to $30.50. So it looks like it is available, but you'll notice that it doesn't have any premium in it. So let's come up here and look at all the strikes. Let me do this. I gotta collapse everything so I can focus on just the upcoming Friday. So $30.50 right here. Yeah, there's like no, I mean, basically after you buy this back, there's no extrinsic value left in here to make it worth anything. Okay, so we might actually have to go out 2 Fridays. So the next Friday, the $30.50, that's worth a little bit. So that's worth 16 cents. So let's go out one more $30.50. That one's worth a little bit more, but that's 19 days out. All right, so let's play with this a little bit. So right here, we're going to change this to May 10th. That gets us to 13 cents. So is that good enough for now? I mean, May 10th, that's 12 days away. So that's, I mean, we basically have to wait 2 weeks, 2 Fridays out to get that 13 cents. So if we're trying to keep it tight, you know, that makes sense. But again, remember, if we sell it for this, we have broken even and we've collected all the premium we could possibly collect on it for that duration. But I do want to find out what the next week out. So we got 13 cents to go out 2 weeks. If we go out 3 weeks, what will 13 cents increase to? So it actually doubled. So I was hoping for a little bit more. If it more than doubled, then I was probably going to go ahead and pull the trigger on it. But since it's the same rate, we don't get any benefit from going out another week. So let's come back, get the 13 cents, and I'm going to go ahead and click confirm and send here. So that's on 3 contracts. So we know we're setting a covered call for May 10th. So we know for our additional one, for the 4th contract that we bought, to get us up to the 400 shares, because we own 400 shares. So let's go ahead and just confirm and send this one. All right, so that's in play now, or you know, the order's queued. So what we need to do now is account for that 4th contract that we just got assigned on this past Friday. All right, so we went out to May 10th, which is this order right here. So we're buying this one back and we're selling this one instead. And we need to sell another one too, to account for that 4th contract. So we left click on the bid right here. So that's 1 contract and it's May 10th and it is the 30.50 call, because again, back to our cost basis is only 30.25. So we just have to go up to the next available strike, which is $30.50 in this scenario. So it says 16 cents, but remember, we should be able to get the mark, and the mark is 18 cents. So let's bump this up to 18. Now you'll notice when I did the roll previously, I didn't mess with this number, and that's because it's accounting for the buy and the sell. And my experience is I haven't really been able to get more out of that in practice, so I just leave that number. But for this, for just straight up selling a position, you can almost always get the mark for that. So we're going to go ahead and set this for 18 cents. And again, it's 1 contract. We're going to go ahead and click confirm and send on that one. All right, so now if you click right here, you'll see we have the 2 orders. We have the rolling 3 contracts for the covered call. This is the rolling one. And this is the additional 4th one that we're selling, for a total of 4 covered call contracts on BITO. Okay, now we can look to do the covered call, or sorry, the cash secured put that we like to play both sides. And for that, we can shrink this down to just the 4, because we don't need to see very far out. So again, we're looking for the 27.50 strike price, which is funny because that's what we tried to get last week, right? Okay. $27.50 for the upcoming Friday is $1.16, and another two Fridays out, it only jumps up to 128. So there's not much premium going out more than just the first week. So that's what we're going to do. We're going to left click right there on the bid to queue up one contract for a cash secured put at the strike 27.50. And what's the mid? So we're looking for the mark. It's $1.24. That's the midpoint between the bid and ask. So we should be able to get that. And the thing about it is if when the market opens, the price of BITO doesn't jump around a lot at the beginning, or even if it just levels out sometime throughout the day, you should be able to collect both of these, the put and the covered call side. But if it's jumping around a lot, then that's why I'm having to readjust the order the next morning. And to mitigate that, to try and keep it from doing that, since we have experienced that like the past 2 weeks, instead of putting the mark right here, I could actually try and go lower, just to see if that lower amount fills. And just for trying it out, I guess I might even actually just do that. So let me just jump down to two pennies. So we're just going to give up $2 to see if it'll happen that way. I don't know if it will or not. We'll see. But I'm wondering if that's playing into this. I don't think it is, because if it jumps $1, 2 pennies is not going to matter much. It's going to adjust the premium quite a bit if the price is jumping around a lot at market open. Okay, so we got the one contract for the cash secured put. Go ahead and click confirm and send. So that will queue that order up. So there, we got the 4 orders queued. So we come over to monitor. We can see the working orders. We have the 4 orders. Here's the rolling of the 3 contracts for the covered calls, creating a new covered call contract for a total of 4, and then creating the cash secured put contract to play both sides. So one last thing, we need to check our account statement balance to double check the balance over on the brokerage. So let's go do that right now. All right, here we are again on the website. Let's go ahead and bring Thinkorswim up. So we got the account statement up there. We're setting at the 89,000. We need to go over to the dashboard, and so it's 89,662.28. Yep, matches perfectly. All right, so let's just wait till next week, and let's just check our premiums for the month. So far, we're up to $737.03 for the month of April. All right, we will wait to see what happens this week and see how these transactions play out, and we'll review it then. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.